Ladies and gentlemen, good day and welcome to the conference call for analysts and investors for post-results discussion for Q1 financial year 2022-23 ARVIND Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sameer Agarwal. Thank you, and over to you, sir.
Thank you. Good afternoon to all of you, and thank you for participating in this call to discuss the first quarter results of ARVIND Limited for the financial year FY22-23. Joining me today is Mr. Jayesh Shah, Executive Director and Group CFO, Mr. Swayam Saurabh, our CFO of ARVIND Limited, and Mr. Kaushal Shah, the Head of Investor Relations. The business environment in the recent months has been quite volatile with multiple forces at play. In our key export markets, inflation has emerged as a primary concern for the policymakers, and all central bankers are busy with interventions, including interest rate increases. Consumers have also been feeling the pinch of expensive fuel and food, though government support and high asset prices had kept the consumer demand strong thus far. 2 quarters ago, our key US customers were busy preponing their buying to preempt the potential shipping delays. This had led to an inventory buildup in the supply chain. Now this trend has been reversed, and with the first signs of consumer demand softening visible, our export customers have started to partially postpone their purchases. In UK and Europe as well, inflation is being a matter of serious concern. The prospect of Russia-Ukraine war dragging for long is further adding to a weak consumer sentiment. In domestic market, demand has been good, including through this ongoing EOSS season, and most players are expecting this to continue through upcoming festival season and are hoping for a good Diwali. Commodity prices peaked during this quarter and have finally started to come down. In case of cotton, the decline is quite pronounced, and as we speak, the November deliveries are quoting at almost 35% discount to what was the peak price a few weeks back. Other raw materials and shipping costs have also started to come down. Anticipating price declines, some of our customers, especially in the trade segments, have started to delay their ordering as far as possible. So on the whole, this market environment is quite interesting and complex. It's playing out. Coming to the performance update, our first quarter result was best ever Q1 in terms of both revenues as well as net profit since the demerger of Anup Engineering and ARVIND Fashions. Q1 revenues were rupees 2352 crores, 2352 crores, which was 64% higher than last year Q1 and 7% higher on the sequential basis compared to Q4 last year. Excluding other income, EBITDA stood at rupees 220 crores, which translates into an overall operating margin of 9.4%. Profit after tax was reported at rupees 106 crores, excluding discontinued operations. Our internet business is classified under discontinued operations, subject to sale of ARVIND Internet to Bigfoot Retail Solutions Private Limited for a consideration of rupees 152.3 crores, effective 30th June 2022. This transaction is expected to close next month. Textile volumes for export markets were robust during this quarter. Denim sold 20 million meters of fabrics, which was same level as last year's Q1. Wool volumes rose from 23 million meters in Q1 of last year to 32 million meters in this quarter. Price realization in both these segments of denim and woven fabrics increased by approximately 35% compared to last year's Q1. Garment volumes, excluding essentials, stood at 10 million pieces for the quarter. Overall, textile revenues were up 68% to 1976 crore rupees, 1976 crores. AMD started this quarter on a strong note and its revenues were up 45% to reach rupees 279 crores and an EBITDA of 32 crores. Demand for AMD products continues to be strong among our customers. However, input RM costs and expensive shipping kept the pressure on AMD margins, which stood at 11.5%. Overall, we expect Q2 to be marginally muted compared to Q1, given all the volatility in the business environment. And the rest of the year will depend on how the demand is impacted given the recessionary situation in global markets and the commodity prices, which are also quite volatile. At the start of the quarter, the RM prices were high, translating in higher valuation and temporary increase in the working capital required. We expect to correct most of this excess working capital during the quarter and continue our debt repayment program as planned and communicated to you. We continued our trajectory of reducing our long-term debt, and in this quarter we have repaid rupees 56 crores, taking the balance to rupees 901 crores. Overall, net debt stood at 1809 crore at the end of the quarter, which was rupees 127 crores higher than the March ending quarter, and this was driven by working capital, as I explained. So this concludes my opening remarks, and I now invite you to ask any questions that you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, everyone. Thank you for taking my question. Sir, first question is regarding the real estate business. I mean, you have a joint agreement, JDA kind of agreement with ARVIND Smart Spaces. Just trying to understand. So, is it like you get the share of the revenue and entire cost and everything responsibility of execution goes to ARVIND Smart Spaces, or you get the entire cost and debt in your books, and ARVIND Smart Spaces just develop it and get a share of the revenue? So that is my first question.
Right. So this question was asked last quarter as well. ARVIND Smart Spaces act as a developer for us, and the land is owned by us, which is basically developed. We get cash directly, which is the cost is getting booked as project expenses, and later on, once the project gets completed, revenue will get recognized. Right now, only cost is what you see in the P&L.
Okay, so it is booked in your P&L cost.
Yes, that's a development.
Okay, fine. That is fine. That's it. My second question is on your net debt. It's a good thing that long-term net debt has gone down. But if you see, for the last 7 consecutive quarters, we have seen a consistent reduction in net debt. So this quarter, if I'm not mistaken, the net debt has increased a bit. So just trying to understand what led to this increase in overall net debt.
Right. So net debt has increased by 127 crore this quarter, and this is primarily the value of inventories, which has gone up. As you know, input prices have continuously been going up. This we expect to largely correct by the time we exit Q2.
Okay. So directionally, the net debt reduction would continue. Is that what you were saying, sir?
That's correct.
Okay. One final question, sir. Sir, both RM prices, elevated level, and you also mentioned about demand, muted demand in your export market. Just trying to understand which is more concerning. I mean, both are, but I'm just from your point of view, what will bring you, more relief in like more better demand, or the RM prices going down?
So, both are interrelated. Demand is, let's say, getting impacted because of discretionary nature of apparel, at least large part of apparel. RM prices coming down could make it more affordable to buy, but it depends on different segments. They are not really one-to-one, but RM prices going down and demand continuing to improve should help outlook for a textile company like ours.
Okay, sir. I'll come back in the queue. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Priyana Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity. So I had 2 questions on the business side. You mentioned that the demand is muted in the near term, but just wanted to understand the relationship between RM and FE prices going forward, at least for the near term, whether generally we say that fabric is it takes time for fabric prices to correct. So are the customers really wanting the prices to reduce in line with cotton prices? How are they behaving actually in terms of product pricing, in terms of order booking, whether they are ordering 50% of their general order book or 40 or 80? Just wanted to understand how is the customer behaving in both domestic and export markets to understand the underlying business scenario.
Yeah, sure, Prerna. So let's kind of talk about domestic and exports separately. As far as export markets are concerned, like we shared even a couple of quarters back, there was clearly a preponement of buying which was happening because, large customers, especially in the US, they had seen significant shipping delays and some of them had even incurred air freight charges and they wanted to avoid that. And hence, in our Q3 and Q4, we saw a slightly preponed demand compared to the season which normally buying happens, right? So that played out, and obviously we've been aware that the inventories have been slightly higher than what we usually see in the pipeline. Now, having said that, we are also seeing that going forward, the consumer sentiment itself is going to become a bit of an unpredictable one because all the COVID support from the government has come down, and then overall interest rate environment going up, price going up is making it seem like consumer sentiment is likely to soften, right? So if you put these two together, quite obviously from a demand for our products point of view, there is a degree of uncertainty. So far, we have not seen any major cancellations. So, our businesses work on reasonably long contracts and lead times. So we are seeing some small postponements, but not any major cancellations, right? Now, if you track the results also of the global companies, results declared until April or May have been reasonably strong. Now, from this point onwards, how things unfold is something which we are also, going to see and will update you as and when things have happened. But so far, like I said, it's a cautious situation, but nothing which tells that things have reversed for us from an export market point of view. In terms of, domestic market, it has been really good. I mean, the whole domestic markets have done quite well right through the, end of the season sale in July. And most participants believe that we should continue to see a good holiday season for us, the festival season coming up as well. So on the whole, I would say that there is a possibility of things being a bit muted, but from what we see, there is nothing which kind of, concerns us too much.
So can we assume that, the sluggishness in the export market should more or less be compensated by the domestic market, because we had in the past increased our share of export market volume in the last 1.5 years. So will that rebalance in the near term is how we should look at?
Yeah, sure. So from quarter to quarter, it does kind of change our export domestic mix, and it would be fair to say that in the coming days we'll see stronger, uptake from the domestic customers, and that possibility is there for sure.
If I can add to that. So obviously the risk which we see on export, the goal will be to try to compensate, and goal will be domestic. But it's also the fact that it's a little bit uncertain, to what extent, let's say, further deferment of orders could happen, how fast the inventories would liquidate. Hence, sort of a conservative view on the fact that quarter two likely to be muted. It's a little bit uncertain out there.
I completely understand on that, and this is really helpful, sir. So just wanted to know current utilization, is it higher, lower than the numbers reported?
Current utilization of what?
Across capacities in denim, woven and garmenting.
So you would have seen already in woven as well as garmenting, we are quite close to the total operating capacity we have. But in denim, we are not fully using capacity because the cotton impact, as you know, as a percentage highest is in denim fabric. And as cotton prices start to subside, we would see improvement in denim capacity utilization.
Thank you. So that was quite helpful. I have a few bookkeeping questions. I can return back the question to you. Thank you.
Sure.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Sir, just on the cotton, you mentioned that the cotton prices have been now trading at almost 35% discount to the peak prices, which is heartening. So, and I think the cotton output in the next cotton season hopefully would be better. Just trying to understand in terms of availability of the cotton, how's the situation? I mean, we have been hearing that many of these companies are not buying cotton, not building an inventory. Can you give us some idea if people are not buying, a few are not buying, a few have small pairs of shut down shops, then how this price level, 85,000 at this elevated level, how they are trading? I mean, what is the availability situation? Just trying to understand what's happening in cotton.
Yeah, sure. So just to be very precise, when I put the word 35%, it's for the November deliveries. So it's a forward-looking price. I'm not saying that currently the cotton is trading at 35% less, right? That's one small precision there. But to answer your question more broadly, see what's happening is if you see the global sort of supply side situation, that's also a little bit more nuanced and complex. So like if you take American cotton, which is one of the big sources, that West Texas crop has been spoiled by situation there, the weather situation there, right? So that's one part of supply is impacted there. The Chinese cotton continues to be outlawed to be used by any of the Western buyers. So that part also is impacted. The Indian cotton outlook is kind of yet to be kind of crystallized and certain. So we'll know only by September end or October which way the rains will play and how much of a good harvest we'll see this season. So on the whole, all the sources of supply which impact our availability and prices are still in a way uncertain. And hence it's very difficult to say which way things will go. Yes, from a demand point of view, we do believe that the pressure which was there may not be as steep. So we expect some softening, but at the same time, given all the supply side challenges I talked to you about, we don't expect that the market will crash down completely. So market prices, we believe, will hold. And of course, it's difficult to say which way.
Okay. And sir, final question on the water business. I mean, what is happening in that water business? How do you get in orders, and how do you going to see as you get it in the next 1 quarter or so? You would see some profitability or break even kind of thing in water business.
So water business is going as planned, and we have never given specific numbers around performance. We have basically talked about the other segment not being a drag on overall EBITDA, and water business is progressing as planned, and it is profitable.
Okay, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star in 1. The next question is from the line of Desh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. Just I had a couple of questions. So, just to understand this implication of a cotton price and the spinning spreads being extremely low right now, given the differential in Indian price and international price, is that expected to impact us in terms of actually on the denim side, or how should we be thinking about this?
So if cotton prices start to come down, assuming demand remains constant, cotton prices starting to come down, and spinning margins start to get thinner, this will help our cost in denim as well as in woven. So that's
So if spinning spreads are lower, it helps us, is it, or it hurts us?
Yes, because we don't have 100% in-house spinning capacity. If spinning spreads, when they were higher, we were paying those charges.
Got it. So how much of our capacity do we use internally for spinning as opposed to purchasing outside yarn?
At textile level, it will be about half-half.
Half-half. But then I'm just assuming that when overall spreads in spinning are higher, it would also be helping the other half where we have our own spinning, right? Because effectively other people who actually aren't integrated wouldn't be able to pass it on.
That's correct. In-house is on cost. But the other half on which, you would pay what market would pay. So if that margin starts to get thinner, this should help.
Got it. So effectively, right now, if you see, from what we understand is that, spinning spreads are extremely low. So would that sort of imply that this is slightly higher than our normalized rate of profitability?
So, of course, I answered it already. When spinning spreads are low, by design, this would aid. But there are just too many variables to determine ultimate profitability or cotton cost, consumer pricing, customer pricing, and demand.
Good. And so on the got it. And on the garmenting side of things, what I understand is that obviously people look at the current actually cost of fabric and materials, RM, etc. And your pricing is a little more it's a little dynamic. In denim also, is it like cost plus effectively where your buyers look at, or is it looked at a bit differently?
No, not really. See, we don't do any customer contracts on a cost plus basis. We either sell them fabrics for a given variety on a per meter basis, or we sell fully made clothes. And that output is based on a per unit output pricing. It's got no direct linkage to a cotton price.
It is linked to cotton, but there are other variables in play, the design, the R&D which goes into it,
yes.
The relationship with the customer, correct. There is no one-to-one
There is no cotton price link clause, if you ask me that.
Got it. And the other question was on the garmenting side, how are you guys just seeing overall demand? Because obviously, on one hand, we're hearing stories about, excess inventory at a retailer's end. On the other side, we're hearing that India is gaining share as a percentage. So how should we be looking at, our order book, our discussions, our ability to pass on increases in prices, etc., to our customers?
No, good that you asked. So garmenting in quarter one, we have done well. And also, we have spoken about it, garmenting and AMD being two growth engine, also accretive from an EBITDA perspective.
Yeah.
Garmenting we have done well, so have on AMD, and this should continue also going into future quarters.
Got it. So and the reason we aren't seeing any impact on overall demand is because of us gaining share?
No. So, future quarters, demand does make things uncertain. Garmenting as a business for us has underperformed, but have last 3 quarters stepping up quite significantly. And I was just making a point that garmenting has done well in quarter one, in line with what we have guided, and continue that trajectory, subject to demand holding well.
Just one more thing to add on what Sir.
Sorry to interrupt. Mr. Gandhi, may we request that you return to the question queue? There are participants waiting for their turn.
Sure.
Thank you. The next question is from the line of Chinmay Kabra from MK Global. Please go ahead.
Yeah, hi, sir. Am I audible?
Yes.
Sir, I just had a couple of questions. The first was that we have witnessed preponement and postponement, like you said, in the orders. So by when do we expect the orders to arrive at the normal flow? Like any estimated duration or estimated time?
I think this whole inventory correction cycle should kind of play out in next quarter or so, and we should be kind of past that by the next quarter ordering cycle. Then after that, obviously things will depend on the market level demand and supply, and this whole inventory correction story will be over.
All right. And I just had one more question. I'm not sure if this was asked previously, but just wanted to know if whether we are passing any of the benefit of lower rates, the current lower rates which have fallen. Are we passing on the benefits to the customers for this?
No, not like that, not yet. Obviously, over time, as the cost structure changes, it's a competitive market, so the pricing will reflect that in the medium term. But there's no direct linkage. Like I said, our price contracts are not linked to input prices directly.
Okay. Thank you, sir.
Thank you. The next question is from the line of Nirmal Shah from Seraphic Management. Please go ahead.
Good evening, sir. I just wanted to understand what's your exposure for domestic market in denim woven on the fabric side?
What do you mean by exposure?
Means how big is the domestic market for you in terms of supplies vis-a-vis exports?
So domestic market is about 30% of total, about 35% of the denim and woven combined.
Right. So when you expect some sort of a buoyancy in domestic market to compensate for the slowdown in exports, you mean the entire thing can be taken care by the buoyancy in the domestic market, or you think there'll be some?
No, we don't know. So we do not know how bad export can get. Right now, there are two situations. One is inventory, which some of our customers are sitting on, and others could be how demand could deteriorate. It's a very evolving situation. We do see that domestic has been very positive so far. We'll have to just wait and see how next 2 months evolve. And of course, our goal will be to respond. But it's difficult to put a number to it if, what will be the level of impact and if it can be entirely absorbed by domestic market.
Right. But in that case, for your garment business, you would have already started receiving the orders to be supplied for the Christmas and the December quarter, right? So if you can just give us how does it look like, the order book for garments?
No, correct. But, at any point in time, we have a forward order book across our businesses. And at this moment, the order book is a little weaker than a normal quarter. Hence, we expect, the future months to be a bit muted.
Right. So can you, sir, quantify or give some range on a YOY basis, how short it is?
No, at this point, we will not be able to quantify because very dynamic. It changes every alternate day.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Sameer Agarwal for his closing comments.
Sure. Thank you, everybody, for joining us today. We will meet in one more quarter. Bye now.
Thank you.
Thank you. Ladies and gentlemen, on behalf of ARVIND Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.